quality matters at this stage when markets are unstable. Apple and Microsoft are some of the highest quality stocks out there. What's the disconnect, and how do investors navigate that?
Yeah, what you want to do, Dom, in this market is that you want to identify companies that have pricing power. Microsoft, Apple, those companies that you mentioned, you want to look at their gross margin or gross profit, which is revenue minus cost of sales divided by revenue, because we talked a lot about inventory, and inventory is part of that cost of sales. So you want to see companies that have good relative gross profits and gross profits that are increasing.
So if that's the case, what types of companies do that? If you look at companies like Microsoft and Apple, they supposedly have some of those qualities, yet they are being punished more than other parts of the market. If you're looking for quality and you're looking for those outperformers, what factors and what characteristics then do you want to find, and then what stocks are fitting in terms of those factors?
Great question. You want to identify those companies that have increasing earnings forecasts for, say, 2022, because those are the companies that are doing very well. They're increasing their earnings. For example, you can look at healthcare. Hologic is an example of a healthcare company that makes diagnostic equipment, imaging products, and they are actually increasing their gross profit. It moved from about 55% a few years ago up to about 64%, but they're also increasing their earnings. Earnings are increasing about 28% since the end of the year.
So if those are the types of companies you're looking for, is there an environment right now where you feel as though there are certain companies that are not fitting in terms of those characteristics that you would stay away from? What's the place in the market right now that scares you the most, Egis?
The one that scares me the most would be around the consumer discretionary, because as you talked about earlier in the show, inflation is starting to impact the consumer. And if you have a company or you're looking at investments that depends on that discretionary spend, those are the companies that may have difficulty going into the next couple of years.
So if that's the case, and that's going to be the fear, and we do have those consumers paying higher prices, the Fed becomes a huge part of this discussion. We got the meeting minutes yesterday. We know that there's kind of this battle, this campaign to really tackle what's happening with inflation right now. Is the consumer going to be in a strong enough position to prop up this economy? Or, in your mind, do we need to have that mild-ish recession in order to reset things for that consumer balance sheet?
What we're seeing is that, because that's really centers around the question, are we at peak inflation? We don't believe we're at peak inflation because of two things that you talked about earlier: food inflation and energy inflation. We see that in the next 12 months increasing. So the consumer will be impacted going forward in the near term.
Now, if that's the case, let's talk about whether or not you feel as though the market is in this kind of a bottoming process. Or are you do you figure that this is going to be an opportunity where people can so-called dollar cost average in, kind of leg into the market? Or do you feel as though there's another downdraft to come? What is your base case, Egis?
Yeah, Dom, it's really difficult to call the bottom. So what we're focusing on is buying those quality companies. If you have a quality company, you want to buy it. And plus, you want to look at your time horizon. If your time horizon is 3 years or more, you could definitely get into this market. However, if you have a shorter time horizon, say you have college tuition or a down payment on a home within the next, say, 12 months, you want to look at maybe some less risk in your portfolio.